Fed's deflation dilemma, public demands versus market realities. In a razor-sharp analysis, financial journalist Jim Grant exposes a fascinating paradox at the heart of America's monetary policy. While the Federal Reserve has long treated deflation as public enemy number one, the American public seems to be yearning for exactly that. Grant opens with a scene setter that's practically cinematic. Fed Chairman Jerome Powell, Sunday morning paper in hand, coffee going cold, as he confronts a startling revelation in Catherine Rample's Washington Post op-ed. The bombshell? A CBS News YouGov survey showing that an overwhelming majority, 79%, said lowering the price of goods and services should be a priority for the president-elect. The irony isn't lost on Grant, who points out that this isn't just about slowing inflation. The public wants actual price decreases. This stands in stark contrast to the Fed's long-standing paranoia about deflation, dating back to the days of Ben S. Bernanke, Ph.D. Grant's criticism of the Fed's recent actions is particularly biting. He questions the logic behind recent rate cuts, noting that the Fed has made a 50 basis point cropping of the federal funds rate target in September, followed by a subsequent 25 basis point reduction in November. All this while, markets are positively buoyant, as Grant colorfully illustrates with the tale of a $6 million banana duct-taped to a wall, later eaten by crypto boss Justin's son. The article takes an even more intriguing turn when Grant introduces a Truth Social post from the president-elect, demanding that BRICS countries essentially pledge allegiance to the dollar or face 100% tariffs. Grant, through reference to the New York Sun, frames this as an attempt to elevate the dollar from mere reserve currency to mandatory global legal tender from Moscow to Altoona, PR. In a masterful historical connection, Grant closes by juxtaposing this moment with President Kennedy's 1961 State of the Union address, where Kennedy declared, "This administration will not distort the value of the dollar in any fashion, and this is a commitment." The contrast between then and now is stark. Kennedy was defending a gold-backed dollar, while today's Fed faces a far more complex monetary landscape. Grant concludes with a piercing question about Powell's predicament. How can the Fed possibly square the circle of supporting the public's strong expressed desire for everyday low and lower prices while keeping the plates of leverage spinning, and of somehow living with that man in the White House? The piece masterfully weaves together monetary policy, public sentiment, political pressure, and historical perspective to highlight the Fed's current predicament, trapped between public demands for lower prices and the institutional fear of deflation that has guided policy for decades.